Happy Sunday and welcome to Weekly Outlook number 6. Recently, there has been a lot going on in the markets, and if you've been trading the markets or keeping up with them, you will know that it's been pretty crazy. And if you look at the chart, or any chart, it's all coming crashing down, and that's what it seemed like. But this Sunday, as the market opened, something really interesting happened, and I want to share what happened. So originally, I was going to share an overview of all of these charts here, and what we have at the top is we have the equity markets with the euro at the top right, and then we have things like gold, Bitcoin, and the dollar. And looking at this picture, the dollar seemed to be the only clear winner, and that's what it seemed like. But now as the markets open, take a look at this Bitcoin chart. This was the one that I was really going to highlight and showcase. And if you look at it on a weekly basis, it fell from peak to trough 25%, which is an enormous drop. And I called on the A1 trading show that we could very well go down to the 72,000 level. And we almost did that. However, take a look at this. 12% in just a matter of 1 hour. Now, why did this happen, and what does that mean for the future of the week and for all markets? So looking at my news terminal, Financial Juice, this is where I get all of my news, real-time news, and where I monitor the economic calendar. We see that Trump went ahead and announced that the cryptocurrency reserves will boost this critical sector, and he has been very, very bullish with Bitcoin, and not just Bitcoin but cryptocurrencies, and he wants to make the United States the reserve for crypto. And so when that happened, and as soon as the markets opened, you saw that huge rally in Bitcoin, and I'd argue that it gave a little bit of hope and optimism to other markets. The S&P 500 also struggled tremendously. The Nasdaq also went ahead and is now pulling back. Now, I want to be cautious because throughout last week, the equity indices were getting pretty beat up. And what would happen was any gains that were made by noon, they'd get faded back down. And so that, for last week, that was a very bearish thing to look at. But I don't think the equity indices are going to be bearish for long. In fact, I don't really think they're bearish at all. I just think that we're in a huge range. Because if I'm looking at this chart and I start marking it up here with some just basic horizontal levels, we see that we haven't really gone anywhere from November till now. We're pretty much dead money. We have been ranging in this area. And so I don't really think that there's a confirmed bearish trend. Maybe in the short term, and maybe for that last week it was, but I don't think that it's going to be bearish and the world's going to crash and everyone's screwed. I don't think that. In fact, as you see, whenever the market has gone to this type of level and there has been some sort of retracement, or you can see a clear picture of buyers stepping in, the market tends to go ahead and follow through with that. And so that's what I think happened here. When you have this bullish candle, I think that the market could continue to go ahead and push higher. Maybe not breaking all-time highs, but I do think that we could flirt with this level again, and maybe we can just continue some range-bound motions. If you look at the S&P 500 here, you can see that also whenever we did go ahead and hit these, discounted levels relative to where we've been at, there has been some follow through with that move. Now, before we go back to the charts, I want to go ahead and review the fundamentals. I want to see the inflows and outflows that smart money did and see how we can use that to our advantage and look for some opportunities. And I'll share what I think could happen and what could not happen. But I do want to leave you guys with some actionable opportunities that I think I'll consider taking on. So looking at the commitment of traders, which is basically, every big fund manager, every institution, anybody that has a considerable amount of money invested in the market speculatively, they need to show or report to the CFTC buys and sells, right? And then what you can do is get those buys and sells, get a net position, and then get an idea as to where the markets are leaning. So looking at the Japanese yen, you see that the yen has been very heavily bought. In fact, it had a 6.48% increase, and 11,000 short contracts were removed and 24,000 long contracts were added. Now, this has been very in line with my positioning. In fact, I only have one position, and that is the Swiss yen sell. And sometimes intraday I will go ahead and do a dollar yen short, but I never want to hold that overnight because it has some very heavy swap fees that you have to pay. So for the yen, that is at the moment a safe haven currency. And so with all this uncertainty, we have geopolitics. On Friday, Trump went ahead and said that Zelensky is not willing to cooperate with the war with Ukraine and Russia. And then you have, just a miss in growth expectations, when you look at the PMIs and GDPs and stuff of that. And so recently you've been seeing this risk off environment. Now, to also look at, we have the euro, which is something that I don't really want to see, because I still think that when we're comparing, Europe versus the dollar or UK versus the dollar, I think that overall, if you look at every metric and compare the two, I do think that the dollar is still a little bit stronger than its counterpart. So we have, Europe having a 3.3% net increase. You have Australia getting a 3.3% increase as well. And what it looks like is that short contracts are just being removed in Australia's case, and a little bit of long contracts were added. Now, even though we're seeing these increases in these assets, you still have to look at the net position and say, okay, they're still in the negative. And if you look down to the dollar here, the dollar, although has been sold and it had a 1% decrease last year, the net positioning is still positive. So although we're seeing those motions, I don't think that it means that now the euro is going to be stronger than the dollar for a long time and that's going to be the new trend. I don't think that, in my opinion. But it is very possible that we see some strength in the short term. And in fact, I'm not opposed to that, because I hesitated on some positions on shorting the euro and going long things like dollar Swiss. And so if we get some pullback opportunities, then I could have a chance to re-enter the market and continue the trend. And speaking of going with the trend, we have some metrics and news that will come out for the US that could go ahead and pushes back up to the trend that I think is the most probable, which is dollar strength, and even also some strength for the equity indices. So looking at the economic calendar here, we have on March 5th, which is going to be on Wednesday, we have PMIs for the US, and PMIs is a growth metric, right? So we want to see some positive numbers for the PMIs. And on Friday, we have non-farm payrolls, which is the employment metric for the US. Now, it'd be really nice to go ahead and see those two metrics come in as expected or better than expected. And if we do, I do think that we can go ahead and see some continuation and some dollar strength in the short term, because if we have those metrics that are coming in positive, and you add in the tariff concerns, and then you add some, this headline that, Trump is very optimistic on Bitcoin, which is a very risk on asset, then we could see sentiment, get some confidence and say, okay, let's go risk on a little bit. So what would that look like if we get those two metrics coming in well? Well, I can show you. If we're looking at this heat map, and this is for the US, and by the way, this is a software that I use and help me with my trading, and what it does is it gathers all of the relevant key metrics for evaluating a currency's strength or weakness, or not just currencies but other assets as well, and it compiles it down into this very easy to read and digest visualization. And I use this all the time. It helps me a lot, and I'm not gatekeeping this. This is very public. It's called the A1 Edge Finder, and for people that really consider fundamentals in their trading, I would very highly recommend using this product and this service. And it is on discount right now, and if you want to purchase it and if you want to help me out a little bit, you can use code ASPIRE and you can help contribute to this channel and get this amazing software at 15% off. So going back to the heat map here for the US, we have CPI, PCE, and PPI, which are some inflation metrics. You can see those flipping red, and red means good actually for the currency. As far as strength goes, when you have higher inflation, that means that the central bank for that country might be more inclined to hold rates to go ahead and control it a little bit. And if you go ahead and look at the PMIs, if we see some some strength in the economy, that could be also very, very good Now, at the moment, and why I believe we saw these sell-offs is because we were getting some stronger inflation, so higher CPI and PCE, but we were missing a little bit on the growth metrics. Now, we weren't bad. I would argue that the PMIs, as long as you're above 50, you're pretty good. But we had some expectations, and those expectations came in lower than expected, and so the market got a little bit scared, and we had this risk off. If you look right here at this little key, we were going into this stagflation environment. Now, we weren't there, but we were heading there, and if we continue seeing some misses in the data points, then yeah, we could very much be in stagflation, but we're not there just yet. Now, let's compare what a good scenario would look like, and then we can look at the chart and see how it could look. This is the Japan heat map here, and if you see, you have inflation metrics hotter, but growth really good. So now if we go to the yen currency index, you can see that the yen has been appreciating, and so an environment like that for the dollar could also cause some dollar appreciation and some optimism for not just the dollar but for equity indices. If we're getting some really strong growth metrics and we get some pretty good labor market stats, then I could see that there will be some follow through in that rebound that we saw in equity indices and also the Bitcoin and the dollar, and it could be very well. So with that being said, I want to go over to the charts, see what I'm looking at for the week, see what things I could see happening, and share some opportunities that I might be willing to take. So let me go to the chart that I usually use, which is this one. I'll just go on this one here. This is my chart. I like the blue and white, but let's go ahead and see what's happening. So we're getting this. We saw this sell-off here in the euro, and this is where I hesitated at the 105. I hesitated because I saw that we were flirting around with this 105 level, and for me, whenever we are too much in a zone, then the possibility of it, breaking the zone is a lot higher. Usually, I want to see a quick reaction, a quick snap off of a zone, but we didn't. And so at the time, I said, look, if we're in this 105, 102 level, let's go ahead and shoot for this 105.8 or the 0600 level, and then catch a short there. But we never got that. We just eventually sold off into the zone. And so now that has happened, I would like to see the euro go ahead and reach this level. And if we look at a Fibonacci, this right here is going to be the 61% retracement or the 50%, depending on how you have this zone here. And so if we get to those levels and we don't see some more upward movement, we kind of hold it, then I could see that the trend is going to go ahead and continue downwards, especially if we see some strong NFP numbers, some strong growth in the US. That can definitely happen. Same thing with the dollar Swiss here. That's one that I'm looking for. If you're looking at this fib level here, the 50% retracement, the 61 is aligned in this area. I would also like to see those same characteristics. I want to see it retrace. I want to see some good numbers for the US, and if that does happen, then I will go ahead and enter the trade and ride it out for as long as I possibly can. Now, one trade that I am in now that I've been holding is this Swiss yen position. Currently, I entered here and I am up about 220 pips or so. This is more of a long-term position. So actually, I want to see a little bit of pullback here. If we can get back into this, range at the top of this range, which we almost did, but if we can kind of, find a way to get back here, I'd like to add another sell position, play the range here, and then continue the move downwards. And then if we go ahead and break this level here, and we can stay under here consistently and maybe get a break and retest, then I will add again for the third time and continue this move lower. This is a long-term play for me. I do believe strongly that the yen will continue to be bullish, just because that they actually want to hike rates, and they're getting some pretty good growth metrics behind them. So I think that long term the yen is going to appreciate, and out of all the pairs, when you're looking at like US dollar yen, euro yen, pound yen, the Swiss yen makes the most sense as far as being in the trade because it doesn't have a swap fee to short it. All the other ones you have to pay money to be in the trade. So if you're considering, or if you're thinking, well, if I'm a fund manager or I have a large portion of my money, what's the cheapest way I can be involved in this yen strength? It'll be through the Swiss yen. And so that's why out of all of them, I'm very keen on this one specifically, because it just makes the most sense. Now, I hope you really enjoyed the video, guys. If there's any feedback for me, please feel free to leave it in the comments, or any ideas on different types of videos that I could make. Share them with me. I'd love to make more videos on different topics to satisfy maybe what the audience wants. So thank you and have a good day. Bye-bye.